In life, we are on a constant pursuit for our slice of the pie. The pie comes in many forms, whether it's starting a business, higher education, pursuing a career, raising a family, and the list continues. The burdens we face during our pursuit is lessened when we are financially fit. The Breadwinners created a platform where we can discuss finances and entrepreneurship in a judgment-free space. We're striving to encourage healthy financial discussions amongst our peers to capture our slice, until we no longer want a slice and would rather bake our own cake. The mindset of an investor versus a consumer. What's your thoughts on that?
Consumers are one, in my opinion, that want to gain more material wealth. An investor is someone who wants to gain more generational wealth. Someone who's looking to, not for that short-term pleasure, like I call it the microwave society, press the button, you get that instant gratification of the purchase of a material, whereas investors looking at things, longer term.
When it comes to generational wealth, what does that mean to you?
To me, it means, leaving a legacy for the future. Building up a business and even a mindset that you can pass on to your children and your grandchildren. Something that, lasts past the time you're here.
That's so important. It certainly is. And regardless of where you are in that process, you can be first generation trying to be a first generation millionaire, or you can have inherited wealth. I think the literacy part is still important regardless of where you are in passing on that information. So your slice of the pie, what is that?
I am heavily invested in the multifamily housing game, in apartments specifically. So for me, it's just something that I got into, and I had a passion for, providing, in most cases, clean, safe, affordable housing for people in this community.
So I'm a big fan of passion and purpose, and when passion meets purpose. So would you say the real estate industry itself is something is that like your passion or one of?
I would say maybe one of. Okay. There's a lot of aspects. The real estate industry as a whole it's so multifaceted. And there's so many different avenues that people can participate in as investors. You could be, an investor in small single-family homes. You could be an investor that does the short-term rental play, like, providing some Airbnb services. You could buy strip malls or retail properties, commercial properties, industrial properties. There's so many different facets. I've got a friend who's heavily involved in the mobile home park thing. So there's so many facets in real estate. And it's just something that you find your comfort zone with and where you want to invest your money and how you want to look at your returns on your investment. And everyone's got their own opinion, and no one's right and no one's wrong. Just for me, it became the apartment situation because I look at the two biggest challenges I'd have, it's foundations and roofs. So the more units you have in one building, it's less foundations, less roofs. Then was one of my drivers for getting into it and continuing to invest further in it.
You made a lot of good points in there. But before I dive into those points, tell us who you are, your business, and your business is. I'm sorry.
My name is Mark Ardire. I provide the businesses. We own apartments in and around the Cleveland area. The way we've approached our investment philosophy is it's just us, kind of personally. There's many investors out there who, use what they call OPM, other people's money. Okay. We've done a self-growth, and that's what the business is. Crossmark Properties, we're a property management company that provides property management to various buildings that we have ownership interest in.
So, big picture for Crossmark Properties, what's the overall goal, or what's your legacy piece for properties?
So in 2020, we were able to double our portfolio, the number of units we have available 2 different times, and we look to continue doing that. The market in 2021 has gotten a little out of control, so we did not make any investments in 2021. There's a few investments we're either under contract or in negotiations with right now. My long-term goal, probably over the next 5 to 7 years, is to get to north of 500 doors.
Wow, that sounds like a headache.
It is, but you have to have the proper people and processes and systems in place to be successful with anything. You look at a pro athlete, they don't just show up at game day and play. They have people, they have process, they have systems in place to make themselves be the best at what they do.
I'm glad you brought that up, because that's going to segue right into where I wanted to get started. So for someone that's just now starting, that want to buy their first rental property, let's say it's a 5-unit.
Okay.
What are some of the team members that they need to assemble, or the relationships they need to assemble to be successful?
Two people you need on your team, first and foremost: a good attorney and a good accountant.
Okay. You
need a good attorney that understands rental real estate, understands whatever real estate you're involved in. Find an expert in that. There's probably a handful in every market, of firms, small or large, that, specialize in that area. Get together with one of them and partner with one of them, because they are going to be your single greatest ally when you run into problems. Same thing comes for an accountant. You need an accountant that understands what you do and all the different tax implications that, you can take advantage of based on what you do. Those are two key team members. And small size, then the third person you're going to need is a reliable contractor to do that break-fix stuff or to do those unit turnovers when you need.
So when it comes to contractors, and now we're talking like general contractors, are we talking like electricians, are we talking, or what?
The whole gamut. I mean, if you can find, like me personally, I have a guy for flooring, a guy for electrical, I have a guy for drywall, like specific, that's their main trade and focus. I actually had in the past a specific painter. So if I just had a place that needed to be turned over painting, I had my go-to person. If we were doing major renovations, which is something we typically look for distressed properties where we undertake a major renovation, I would either bring in individual trades, do their individual portions, or I would hire a general contractor to run the whole show. But contractors, key to know a good plumber that knows you, that you can rely on. Same thing with electrician, because those are the emergencies that require talent and expertise to fix. I actually have one organization, one company I work with that does both. And if I picked up the phone right now and needed help later today, they would be there. And it comes down to, you bring them good work consistently, but you also pay them on time and you treat them fairly, and it's a symbiotic business relationship.
Yeah, it has to be mutually beneficial. So how do you find these guys?
Oh, it's the number one challenge I have.
Right.
This morning I was just dealing with a new general contractor that did not deliver what he said he would, and that's the common occurrence. That's the rule, not the exception. I would say been doing this over 15 plus years. The list of contractors that I've used and worked with that did not meet my standards is in the hundreds.
Wow. And
that's, like I said, it's my number one challenge, is finding good talent there. And for us, we have a maintenance person on staff that can do a lot of the little things. But as we grow, that number has to grow internally, because I know, you talk about people, process, and systems. I know that those things break down if I'm relying on third parties. That's key. Like you said, your question, 5 units, have a good contractor that can do it all, have a good attorney, and have a good accountant.
Is it best to start small, or is it best to just say, F it, I'm going for it?
I don't think there's going to be any difference in your learning curve. People start small because when people start, like I started small because that's where my finances allowed me to start when I started. I had moved back to Cleveland from New York City, a place where I was paying $250 a month to park my car. And I was looking at buying a double or a couple doubles next to each other. I'm very handy at doing the work myself. And I started out, in driving around, actually 2 appointments to look at a 2-family house, saw a 4-family that was semi on the market, was listed with a realtor, but he didn't list it anywhere. He just had a sign in the yard, and worked with investors he knew. We reached out to him and we were able to, that's how we secured our first property.
So would you throw a realtor in that hat of a relationship or not so much?
So maybe. I have a realtor that I work with now, but it's someone I grew up with playing soccer, playing baseball. And actually he works for one of the big commercial outfits and he's in the multifamily game kind of because of me.
Okay.
He wasn't in it when we started working together, but now he's part of a very successful multifamily team here in Cleveland, Ohio. But you gotta be on your own out there, shaking the trees, finding stuff too. A lot of deals happen off market. I probably get
Really?
2 letters a week, I would say at this point, of people looking to buy apartments. You know, that know, hey, this is an apartment, and they know our business address and they send us a letter. I'm gonna have a list in my phone under apartment buyer with all these different people's names. There's probably 15, 20 of them in there.
So what you're saying is networking, getting out there, pounding the pavement is how
Absolutely.
because you mentioned off market, so I'm thinking, okay, these are things that you wouldn't see online, you wouldn't
Exactly.
see on like Redfin, or you wouldn't see anywhere. These are things that you just got to know the people.
Yeah, wouldn't show up on Zillow or for commercial real estate, LoopNet's a popular site.
LoopNet, yeah.
You wouldn't see those. Sometimes you do find deals in those respects. You know, there's plenty out there, but there's a lot of real estate that transacts that does not hit the open market. In all commercial aspects, in multifamily and industrial, you know, in retail.
That's interesting. So let's back up a little bit. Let's talk about the market for real estate in Cleveland. I don't know if it's just me, but I think I've seen a shift where a lot of spaces like here in Tremont, well, not so much here in Tremont, but like downtown, these big spaces are turning into apartments. Is that a thing, or is that just like a...
There's a lot of development going on. I mean, just driving here, I probably drove past 4 places that were under construction of multifamily housing. There's a tremendous amount of development going on in Cleveland. And I don't remember the statistic exactly, but a recent study came out and it was one of the 15th, you know, most active markets in the country.
Oh my God.
For multifamily apartments in 2021. One of the things we have here is there's a lot of outside money coming in.
Okay.
15 plus years ago, when I got into this business, there was a few there still are a handful of large players that are locally based. The majority of their portfolios here. I've seen a lot of outside California money, you know, where the cost for units appears a lot less than a cost of units, you know, in Los Angeles. And so a lot of that money is migrated to this market, and it's created a push up in what has happened with the prices, to the point where, I mean, I probably look at 10 deals a month, and I've looked at, I can't tell you, countless over the last 2 years where the way I view my properties, it doesn't pencil out, that makes financial sense. But with the prices going up, rents have gone up too, but that's also inflationary things going on right now. So have the price of rental increases, you know, stayed in touch with the 7% inflation? No, at least not for us. I mean, we could push the market, but, you know, in certain aspects, my theory is I don't necessarily want to raise rents to the point where people leave, because then I have the cost of turnover. So I do try to do small incremental increases. And I didn't do an increase on anyone until 2020, from as far back as before the housing crash in 08, 09.
Wow, that's unheard of.
It is, but I mean, I've got some long-term stable tenants that, you know, the numbers still work on the property. You know, maybe the cost of the taxes and the cost of utilities goes up a little, but the way I view it financially, it's still feasible. And there's still enough turnover in the properties that when I turn a unit over, I can go get, you know, market rent.
Makes sense.
Market comparable rent.
So outside money, that's a little intimidating, especially from California, because, you know, on the surface, you think California, everyone out there is rich, right? And coming here to Cleveland, there has to be a reason why. Well, what's your thoughts on that? Like, why are they coming here? Just
because of the value that they see versus other major markets, our pricing, our cost of our, buildings and our real estate is less expensive. So they're priced themselves out of the game on the coastal markets. They don't have $10 million, they've got $5 million, and $5 million doesn't get them what they need where they are. And so they look towards the middle of the country to find investments. And there's plenty of that goes around.
Wow. So here it's 5 million. You can get a lot here for 5
I mean, yeah, that was a good round numbers, but you can absolutely.
I know, but yeah, you can get a lot. So I see the reason why. Okay.
More bang for their buck.
So let's say we're in Cleveland. We want to get this first multi-unit. What's a good start, or where should someone start?
So first, be geographically close to where you live.
Really?
That would be my first thing. Someplace you can get to in 15 minutes.
Okay.
Draw a circle from your house if you plan on staying there a while, and look within 15 minutes. Because if there's that hot water heater that blows in the middle of the night, and you're a small, getting to start out, you need to run out, put the tenant's mind at ease. You don't want to be driving an hour, half hour. You want to be able to get there quickly. Get there quickly to meet a contractor, to let them in. Simple things like that. When it comes down to emergency, you want to be close until you build up, you have staff, and it doesn't all fall on you as a owner-manager.
I never thought about that.
My personal opinion, it's critical.
Okay. Yeah, because you don't want to lose tenants, and then you don't want to lose your mind chasing a few dollars, because I know that can be insane. Okay. What else about location? How do you assess like a city?
So, you can do, competitive market research online.
Okay.
You can look at Zillow and look at what places are rented for, or apartments.com. You can look at heat maps of what the area is like from a safety and security wise, and you have to find a place that you're comfortable. Someone like me might be more comfortable in a low income area than someone else. Someone might maybe more comfortable dealing with, someone who may have had a criminal background that when you take over a property that they're a tenant, and some people might not be. So you find what you're comfortable with and who you want, what your clientele wants, that you want your clientele to be,
mm-hmm.
and you find a property that's going to meet those needs. So if you want to rent to young, 20-something professionals, then you find a place where young 20-something professionals live. If you want to rent to families, you rent to families. If you want to rent to blue-collar, hardworking individuals, you find a property that that's where blue-collar, hardworking individuals live.
Wow. So you break it down that far.
Even further.
Even further.
Even further, absolutely. I mean, I kind of made this point before, but when I'm looking for acquisitions, I'm looking for distressed properties. Properties that are in need of a management turnaround. Okay. In need of a comprehensive rehabilitation from a fit and feel. We're sitting in a very nice place right here. Something that's going to look this way when we're done, and something that looks far, far, far from this when we start.
So when you say you're looking for distressed properties, that takes me right to the next question. So do you like to buy places that need help? Like it needs like upgrades and things like that? Or are you looking for a place that's like pretty much already finished, you just got to add your finishing touches and rent it out?
The first, turnkey would be the second one. That's not something we've looked at in the past. We think we can secure a better value in our purchase for a place that has been poorly managed or has a lot of deferred maintenances and is in disrepair.
Okay, is there a reason behind that, or is it just your preference?
Again, I think it's where I think we can get the greater return on our investment long term. And there's 1,001 investment strategies when it comes to places.
Right.
The way we approach our business and our investment strategies, it's a long-term buy and hold. Some people, I've looked at buildings that last month that were on the market a year ago and a year before that, where people are just buying them, praying for appreciation, and then selling them, trying to sell them for a profit. And that is great while the market's going up. That's something that's going to negatively impact those investors if the market has a downturn.
But is that a good long-term strategy?
For me?
No, just in general. To people that just buy and that just flips.
Everybody has their own
thing,
own personal opinion. I know, I've worked with someone in the past who does that, and he turns around and he brings in $1 million a year that he has to pay short-term capital gains on because he just constantly churns his inventory. You know, he's got outside third party that manages his property, and he's spread out across the Midwest. And that's his philosophy, and he keeps, as he says, trading up. So he'll start with a property that's $1 million, he'll sell it for $1.5 million. He'll take the profits from that, he'll buy a property that's $3 million, he'll sell it for $4 million, and he just keeps moving and moving and moving. And at a certain point, in my opinion, that train stops moving. And he's holding what he's holding, but maybe he's amassed a bigger portfolio. But there's a lot of cost in the transaction. There's a lot of cost in, you know, going through that you know, you have to have the appetite for.
It just sounds like a hassle.
I agree. Like personally, I wouldn't want to get through that process, but his business model that works for him.
True. There's a million ways to do things. Dr. LaCroix was on my podcast talking about stocks, and her thing is there's a million ways to get to the bag. Like that's her thing. So let's say you find a place. How do you assess it and say, okay, this place is worth X in my book? What's a good strategy?
So it's funny you bring that up because my realtor, he'll do these like 4-page complex Excel spreadsheets. And he'll come to the same number that I came to with like 6 line items on a napkin. And for me, based on my experience now, I'm able to, first of all, you got to get your eyes on it and know what you're buying. But then I'm able to look at, you know, I have a way I analyze the financials that are, do they meet my investment criteria or not? And my investment criteria is what's the cash flow of the property going to be? So you look at rent is X, expenses are Y, you know, how's that calculate out? What, you know, you factor in your debt service in that function. So, you know, the major things I look at, utility costs, debt service cost, property taxes, insurance. And then I have a formula I use for what maintenance will be on like a per unit basis.
Okay.
On the average per year, based on what the existing condition of the property is. So my numbers vary based on like I have properties I've totally redone, and my maintenance costs are substantially less than a property that we're newly acquiring and has a lot of deferred maintenance. So I have those calculations I can figure out. And I was saying to my realtor before, I mean, he works in the business, they've got these complex financial models, and our numbers are within like 2% of each other every time. And we just laugh. He's like, I don't know why I do all this work.
Why is he paying for this software?
You know, and he goes through and he sends these Excel spreadsheets, and we just chuckle because it's true. Like I just based on my experience, I know like, you know, how things are going to fall from a cost standpoint, and they're pretty much spot on. And it's like any profession. The longer you're in it,
the better you are.
The better you understand and know it.
That makes perfect sense. That is. So let's break this down for a property that you're assessing, and you mentioned maintenance per unit. But let's look at the building as a whole. Mm-hmm. So what kind of like annual maintenance, or not even maintenance, what kind of cost are we looking at for some like the larger expenses that an apartment building can have?
The biggest expenses are going to be your roof, your HVAC, your parking lot, and your foundation that you could run into. So you need new roofs, that's a high dollar item. You need to resurface your parking lot, that's a high dollar item. You have structural issues in the building, you know, redoing a foundation is a high dollar item. Those things I would say are, and then of course, if you have a building that's got a central heating system like a boiler, you have to understand that replacing that is going to be a costly venture. Same thing if it's cooling. You know, if there's central cooling or central heating, there's obviously high dollars associated with replacement of those systems.
So do you assess that prior to making an offer to the property?
Absolutely, it's all weighed in. So you look at the age of any of the equipment, the condition of the parking lot, the condition of the roof, the condition of the structure of the building. Is the foundation sound?
So for someone that's not familiar with that process, what does that process look like? So
for me, when we're purchasing a building and we write a contract, we put inspector on there, and I bring in a roofer to do a roofing inspection. I pay the roofer. I pay a plumber to come run a camera down the main drain lines.
Wow.
You know, are we solid going to the street? And then we also will run, depending on the property, maybe down one of the vent stacks to see if the pipe's corroded or clogged inside, so you can have an idea of what type of challenge you're going to face coming in. You can see a parking lot visually if it's in disrepair or if it's in good shape. You could see if there's a structural issue in the building, I bring in a structural engineer to assess the situation as part of that process too. You know, in a typical homeowner, they get some home inspection. It's like a fireman on his, as his side job, and he
Yeah,
got a
yeah.
700-point checklist. I've always, even when I bought my house, I found that to be a waste of money because I can visually look at all those things, but specific things when purchasing an apartment, I bring in experts in that field that I've worked with in the past that know it's X amount of dollars for them to come do the assessment. And so those are the things I look at because I have to understand, am I inheriting any problems that I can't see?
Definitely, because that's a big fear as well. I mean, even when you consider like buying a house, it's the same fear. It's
Yes.
like I don't want to deal with this mess.
Mm-hmm.
So with an apartment, it can be a little intimidating because you're thinking like, man, I don't know what this is going to cost, what that's going to cost, and if you miss something and you get hit blindly, it can be expensive, and that can ruin everything.
And that's why you get back to a point earlier, having a good lawyer. So in your purchase contract, there's certain things that if they fail to disclose or something, you can go back on the seller. There's certain calculations. And so when a property transfers, the previous owner is responsible for the tax up until the point that they transfer. In this county, you pay taxes in arrears. So in 2022, we're paying taxes for 2021. So if that previous owner owned the property for the majority of 2021, that should come out at title and transfer. But this county is, in Cleveland, the counties are really delayed, or Cuyahoga County, Lorain County, they're delayed in putting out their tax assessments.
Okay.
So sometimes those don't happen until the very end of the year. You don't know what the next year bill, and so there could be a change in that. There could be a change in the rate that'll substantially impact you. That happens 5-6 months after you take over the property, where that cost should be on the previous owner because it was assessed against their ownership of the building. So in our contracts, we write language so that we can go back and secure that. But every time they want to fight it, and every time it gets a lawyer involved.
that just sounds like
It's simple. It's in the contract, but
Yeah.
they want to go and fight it.
Absolutely. Why not, man? It's just the American way, right? So we're at the stage where we've assessed the property. And now we're like, okay, let's use the 5-unit example.
Mm-hmm.
So how do you determine how much rent you can get for this distressed property that you're going to...
So if it's vacant entirely,
yeah, let's say it's vacant.
I mentioned before, you go on renting lists or websites, you get on apartments.com, you get on Zillow, and you look at what, in a close area, what similar size units are renting for. And you can see, everyone puts pictures online, you can see what condition those are in. And so from a visual perspective, you can say, okay, I can get more, or that's what the market rate is. Being in the business for a while longer, I don't have to get to that level of granularity now because we kind of know in different regions and different markets what we can get and what we can't. But we'll put it to the leasing agents to press the market and see if they can get more. And that will help benefit us. So that there's plenty of free research you can do to figure out and assess what you can charge in rent.
So you'll hire a leasing agent?
So in my business, what I've traditionally done is I'll have school teachers.
Okay.
Who, they're off in the summer, which majority of the rental activity happens in the summertime. But then they've got a schedule where they're done at 2 or 3 o'clock, and let them show the apartments and get a commission for renting a place.
That's cool.
So it's just someone looking for a little side hustle to make a little extra cash.
We love side hustles.
And so I'm not working with any. People's life things change, but traditionally that's what I've done. And probably will find a couple this summer to, tackle the summer rental season. Typically they're younger, without families,
They got the capacity.
They got the time and effort.
Because it's, side hustles.
But you can do it yourself. I mean, I've done it, I rent properties all the time myself too, as the lead property manager. So
you just list them on all the sites and...
So we use a property management software that we can list on, and it puts it on a bunch of sites.
Okay.
We will list on apartments.com. Zillow changed their business model, and now it's paid for listing, and it's like $20 a week. And it doesn't make sense because we don't struggle to find any place we put on the market these days. We'll have 20 applicants. So why should I pay for a service to put it out there when I'm already inundated with applicants as it is?
Yeah.
So we used to use Zillow, used to use Craigslist. You have to evolve with the market. Facebook now, there's a lot of listings that go up on Facebook.
People still use Craigslist?
Not anymore. I said we used to use Craigslist. You have to evolve with the market. I mean, there was a period of time back in the mid-2000s where every good lead we had came through Craigslist.
Really?
Mm-hmm. There was a local website in Cleveland we used for a while called Plugged In Cleveland.
Okay.
Our best listings ever came through that. So it's just, as the market, you have to constantly adapt and evolve.
That's interesting. That certainly is. I haven't heard Craigslist in a while. It kind of just, fell by the wayside.
It did. I mean, things change, so you have to move with the market.
You don't want to be Blockbuster, right?
Mm-hmm.
No one wants to be Blockbuster. Okay. So now we're at the place where we got some applicants. Things are looking on the up and up. We're optimistic. How do you go through the process of determining what's a good applicant, what's a bad applicant?
So we make our applicants, this is something that we changed the way we do it within the last 24 months. We make our applicants fill out a background check, credit check, criminal history check, application online. And so through our property management software, they use a service. We used to use a third party that was based out of Southern California. We'll still use them occasionally. Mm-hmm. They give us like a full credit check, but they go do this comprehensive application that they have to pay for. The money doesn't touch us, and we'll get those reports sent to us. Then we evaluate it based on the criteria of the individual building. So if someone's got a lengthy eviction history, it's a no. Because tigers don't change their stripes.
No, they do not.
Certain things in criminal backgrounds we'll avoid. It's personal. We don't want anybody that's on the registered sex offender list.
Yeah.
But there's people that will just take those people exclusively. So you have to look and you have to decide what your appetite is and what your criteria you want to be. Once we narrow it down to like an applicant, we'll use Google. Search them there. Because people will lie. And you'll find a Facebook page or stuff like that is very telling. And the whole process of once you get an application to deciding, you're talking 10 minutes. Because we have it down to, I have it down to 10 minutes of time just to decide if it's a yay or a nay. And you're looking at things like income, credit history, different things.
So you pull credit as well?
Yeah, so the report we require them to get pulls credit, pulls eviction history, pulls criminal history.
Okay. So I'm pretty sure it's subjective to each property owner,
and each property,
yeah. So when it comes to credit and credit scores, is there a place where, like, let's say in general, where a lot of like property owners like to see their tenants?
I don't think there's a single rule of thumb. Mm-hmm. I think for some of these higher end buildings in downtown Cleveland, they're looking for higher end scores. I don't think we have like you must be 600 to 700. We don't have that rule. Mm-hmm. It's really the history more than the score.
Makes sense.
You have to look at the pattern of their credit. And a lot of people looking for apartments are younger and have less credit history. So you have to take that in consideration. We'll get people with zero credit history. And in those cases, we'll take a larger security deposit.
Every apartment I've lived in, I've never got my security deposit back.
Really?
Yeah. It was always, we got to change the carpet, we got to paint the walls, we got to do this, we got to do that. It's just crazy. That's just a side note. Unless someone hasn't paid rent or severely destroyed a place, it's very rare that I have kept the entirety of a security deposit. We keep the entirety if someone moved out early. The lease still went up, you still had a lease period. But there's a security deposit disposition form that we send to all. We send it blank if we send it with no check if there's no money coming back, or we'll send it with the thing. So it clearly outlines, again, back to having a good lawyer, clearly outlines what the deductions are for. So from your perspective, a security deposit hedges against what? Does it hedge against
damage in the unit and someone not paying rent? Decades ago, we standardized on a security deposit format that is easier for us and it's easier for the tenants, as I always say. So any place we have that's under $1,000, the security deposit's $500. Any place that we have over $1,000, security deposit's $1,000. Very flat, even round numbers. It keeps it consistent across our portfolio. You know, and when we take over buildings, they've got 2 months, they got a month and a half, they've got 3. You know, it's a lot to manage and track as a business. So I looked at it as what's simpler for our business and our accounting purposes. And it also it's not that equal to the rent amount, which then in the last month of the contract, people just decide not to pay because they know they're leaving anyways. In their mindset, from a mindset, you have to look at the way they view things. It's not the same. I didn't give them 1 month's rent as a security deposit, so I cannot not pay my last month.
Oh, because they may think that I already gave a security deposit, so I can just leave.
Yeah, I already gave him 1 month's rent as a security deposit. I'm taking off, and I'm not going to pay him his last month. Then you walk in, they trash the place. You have to dig into the mindset of the consumer. And by changing that mindset, it changed the way that we got apartments handed back to us.
In satisfactory condition.
Well, not just in satisfactory condition. We had this history of people just not paying the last month's rent.
That's interesting. That is. But I can see why.
You have to change their perception. Why do you think they list things for $19.99, not $20? Because people think it's $19.
Because it's cheaper, but it's the same thing.
You have to look at the mindset of the consumer. Dig deep. That's just something I've done, and it's been successful for us.
Yeah, that's kind of like market manipulation.
But you get that security deposit really if someone does extensive damage. It's like, you know, what it's there for. Or if they fail to pay rent, at least you have something in your pocket.
So let's talk about one of the cons, right? People don't pay their rent. Mm-hmm. So what's a process to, okay, how many months do they miss before it's time to evict, and what's like that eviction process?
Eviction process is different in every town.
Like every county or?
Every city.
Every city.
Every court. So some cities have combined courts.
Yeah.
Every court is different. The process is, by law, you serve them a 3-day notice that you post to their door, hand to them. You document it being transferred. So I always take a picture of it on the door of the apartment. Picture's got a timestamp. Even if we hand it to someone, we gather that photo. You have 3 days to move out of the place. After that 3 days, you can file for your eviction in court. And there's landlords out there that do it if you're 5 days late on the first month. I really believe in open communication. People run into bad spots, communicate with them. And I tell people always, it's better to communicate if you're going to have a problem than not. And I've got tenants that have lived in our buildings for years that ran into trouble for a couple months, worked their way out of it, they're still there. And they're loyal to us, they'll come back. If had people leave town, move back to town and say, what do you got? Because they know we treat people with, you know, fairness and respect. And, you know, we've been taken advantage of, so we know when people are trying to take advantage, and we know when people need a little extra help, maybe need a little extra coverage. You know, someone lost his job, it's going to be a month till he turns it back over.
Yeah.
You know, do I want to go through the cost of turning over an apartment and re-renting it? Or do I want to see, okay, give me $150. You know, give me what you can right now, and then when you get your job, let's work out a payment plan to pay that back off. That works out 9 times out of 10.
Really, instead of just being so firm and say, after 3 or 5 days, I'm filing,
you know,
gotta get out
the
of here.
rigidity, drawing the line in the sand, I just feel like people are people, and you want to communicate with them. And things change constantly in people's lives. So you have to be able to adapt with the change. And look at it from a cost of doing business standpoint. Like, it's going to cost me $1,000 to go through an eviction process with the lawyers and the court costs and the time.
That's insane.
You know, I don't know, it's different every city. Some cities are more expensive. But is that money worth it to get this place over and then I'm going to spend money to repaint it, fix what's broken, move the trash out they left? Or does it make sense to have a conversation with somebody and work with them to keep them as a tenant, to keep a roof over their head? I lean over the latter.
So compassion plays a big role.
I think you have to be human in this game. I really do. I mean, if you treat people poorly, people will treat your place poorly. If you give up, you know, that's why we redo places. If you give someone a place in nice condition, they will typically return it in nice condition. I mean, there's always exceptions to the rule. Just yesterday, we were at a place that tenant's been there 7-8 years. It's the worst. My clean out crew is saying it's the worst they've ever seen.
Really?
I mean, they clean out houses for a living, and they were gagging.
Oh.
So and that place was really nice when she moved in.
Oh.
There's not a nice aspect. Total gut of the kitchen, all new cabinets, counters, all new floors, everything's going to be done. But so you have exceptions, but it comes with the territory. And to your point of getting in this game, you have to have the stomach for that.
Yeah.
You have to expect the worst.
Yeah. It's always tough when it comes to, you know, having the compassion, because people can take advantage of you.
Oh, yeah.
But then you're human. So you're going to run your business from your own perspective.
Sure. I mean, I run the business like a business.
Yeah.
But that business is in the people business and providing housing for people. So you have to deal with the people portion of it.
So let me ask you this. Do you think that home ownership is important?
I personally feel it is.
So have you ever had a conversation with one of your long-term tenants, like, hey, you've been here for so many years. Have you ever thought about buying a house?
On a few occasions, and I've actually had a couple times in the past where I had a long-term tenant that we purchased the house, we renovated it, and we sold it to them in a way that they could buy it, that was profitable for us and advantageous to them.
Nice.
So kind of like one of those shows where the people are like looking for a house and they buy it and they renovate it before they move in. Similar to that.
Yeah.
You know, but just, I know that they've got a good credit history. And so we created a situation that was financially beneficial for both of us.
That's rare.
It is rare, but I look at everything as a business. It's an opportunity to make some money. So
even when you get to the 500 units plus, you think you're still going to have that same outlook, or is it you think it's going to change?
So the outlook of, helping people buy places, no, that'll go away because the disconnection will be there. You know, when you were smaller and you had a more one-on-one relationship with your tenants, when I did, that was there. But I still think we'll run our business in the similar way where, when we have people that have a history of paying that suddenly have a hiccup, they communicate, we'll work through it with them. I don't think we'll change because what's made us successful to that point, I think will continue to make us successful. It just becomes bigger scale.
Yeah.
We need more people in our business. We have more problems to deal with, but is it more problems on a per door basis? No, it's just the same problems. There's just more of them because there's more units.
So at what point does a property manager come into play when you are, let's say you got, I don't know how many units. Do you think that's up to the person, or do you think that's like what they can handle, or do you think it's financially based or a combo of both?
It's all of the above. So if you're smaller, you just have I would say anything over 20 units, you need a property manager because you do have the time. But if you're someone that works from home every day and is home and can, maybe that number for that person's 50, I don't know. And there's third parties that manage properties for a fee.
Yeah.
And they're a dime a dozen. You could have a single unit. You don't want to deal with it at all. You get a property manager, so that you just deal with making the cash flow, the little bit minus their fee. Let them deal with everything. So it all comes down to everyone's individual temperament.
That makes sense.
I mean, I know people that own two, like a townhouse here and a house there, couples that they were their places before they got married. They have a property manager that manages because they don't want to deal with it ever. It's just a passive investment for them. Property manager tell them when they need money, and they'll send them the rent, profits when that's there.
So you mentioned clean out crew. So, and that's definitely a part of the process when tenants are either evicted or they naturally move on other places, right?
So in eviction, if you actually the tenant's still there, you'll actually have to hire companies that are approved by that court to physically move the stuff out, so the tenant can't come back and say, oh, I had this, that, and the other thing there. But on a typical turnover, our maintenance and cleaning crew can just take care of it. But in certain situations, there's talk about knowing contractors early in this conversation. There's groups out there that just specialize in trashing out apartments, trashing out houses, like getting all the trash out.
Yeah, that's an ugly job.
I mean, it takes a special breed.
It is. Okay, so we got our apartment, we got our tenants. What's some routine maintenance that we have to upkeep? Like, what are some of those things that we have to pay attention to or factor in when we're back at square one assessing the property?
So you have to see, a typical back at square one. So what are you going to look at? Continue upkeep. So your cost of painting, factor in some money for plumbing repairs, like a toilet valve or something like that, or a leaking faucet, because leaking faucets are costing you money and utilities, so you want to fix that leaky faucet. You might be less inclined to do it at your house than you are in a business. You just have to look at your general maintenance upkeep. So, painting, conditions of the walls, conditions of doors, locks, changing locks.
Oh.
If you have carpet, redoing carpet.
Like snow removal, grass upkeep.
Grass is a maintenance thing you have to take care of in a multifamily. Plowing a parking lot if it's busy. Providing a dumpster if it's a larger building that doesn't have city trash service. Those are things that you have to consider and that they should already be in place when you're evaluating them. Every city's got different rules. So a 5-unit in some cities may come with city trash. In other cities may require you to have a third party for garbage removal.
That makes sense. So for someone that's starting out, they should have a well-written plan, right?
I think they should know what they want to get out of it. I think that's what they should understand. And then they should go and seek an investment that's going to, on paper, get them out of it what they want out of it.
Oh, so like a financial plan.
I think that they should have a financial plan. Like, what do I want to get in return? How much work do I want to put in? What do I want to get back? And they should build it from that basis. From a plan of, like a business plan or a maintenance plan, you just understand that those costs are all going to exist and figure out a factor of how you're going to arrive at those costs. And it's going to be different everywhere. There's not like a rule of thumb. What I typically do, depending on the condition of property, is I take 1.5 times rent. So 1.5 times 1 month's rent. So say apartment's $500, I figure in $750. But that includes things in the building. So I got 10 units at $500. I say it's $7,500 on an annual basis I'm going to have in maintenance and repairs and upkeep.
Oh. Okay.
Some of that can go into a reserve for those larger ticket items, like you've got to save some money to do the roof eventually. You got to save some money to do the parking lot eventually.
Absolutely. And this is Slice of Pie Podcast. It's all about personal finance and entrepreneurship. So let's talk about that money. So you're making money, you're having fun, you're collecting rent. What are some tips you would want to give to an entrepreneur to do with that extra cash? Well, the money that they're made off of making off of the apartment.
Have a method to reinvest that capital. Whether it's expanding your portfolio, whether it's putting it in the stock market. Don't treat your investment as your ATM.
Expand on that.
So there are property owners that this is their theory. Like they exert as much cash out of the property to pay. If someone's getting into it as a side business, which is what someone's going to do if they're getting into like a 5-unit, don't look at the money you're making from that property as the money to sustain your lifestyle. Look at that as, a path to future investments and to larger investments.
So no trips to Saks Fifth is what you're saying.
I mean, you get to a point where maybe you could go buy the nice car or go to Saks, but I think you got to take care of your stuff. You got to reward yourself for your work at a certain point.
Of course.
So do some of that, but don't just treat it as, like I said, an ATM where I'm taking that cash and I'm spending it every month. Because at some point you're going to need some of that money to put back into the building. Absolutely.
And that's a really good point that you brought up, and a really good strategy of how to you said about $7,500 if your rent is $500.
I just try to do like
one and a half.
Depending on the property, sometimes it's less, sometimes it's more. But if I had to say someone starting out, take 1.5 times the rent, the current 1 month's rent of the property, or if there's vacancies, what the 1 month rent would be at full occupancy.
And that can essentially serve as like an emergency fund for the property if the maintenance come in less than.
Sure. If there's leftover, like I would budget that on an annual basis for things like, just regular upkeep of maintenance of the building. Like you have to have a plumber show, but it also factors in that money into, you're going to turn some places over, so it goes into the turnover fund. Somewhat too.
Absolutely. Okay. So final tip for the world, Mr. Mark Ardire. Final tip,
tough question. I mean, figure out what your appetite for risk is, and find an investment that's not greater than that risk, that appetite for risk. What you're willing to take on a risk may be something completely different than what I'm willing to take on for risk. And people, they listen to podcasts, they read books, and they're reading that person's risk tolerance philosophy. And that may not align with you as an investor's risk tolerance philosophy. So back to your plan, create your financial goal. That factors in what risk you're willing to take. Because like any investment, you could lose.
Oh, absolutely.
We had a property we managed that was vacant for an entire year dealing with a bed bug infestation. Oh, man. You have to have that appetite to see that through.
Yeah, let's foof.
There's many times I wanted to, I'm done.
I totally understand. You know what? Risk tolerance is so important. So a final tip for me, owner of the Slice of Pie podcast, owner of the Breadwinners, I'll play right off of that with risk tolerance. Risk tolerance is so important in determining that because let's say you're in the stock market and people oftentimes buy stocks or equities that has a really high beta, a really high swing. And it's beyond their risk tolerance. So if the market dips, what's going to happen? They're going to get paper hands, what we like to call. They're going to get nervous and they're going to sell. And they're going to sell at a loss because they're buying things outside of what they are comfortable with as far as a risk. So plan. That is it. We truly appreciate you, Mr. Mark Ardire.
Thanks for having me.
You're welcome.